We're getting a lot of questions about the IPO on Facebook that happened last week, and I put this presentation together to help you guys understand the truth about the IPOs and why trading it is so risky. And I put the nasty truth here about Facebook's IPO, and it's not just the nasty truth about Facebook's IPO, but any IPO that comes out, especially if it has a lot of fanfare. There's a lot of a lot of celebration and just a lot of media exposure with the IPO. The more exposure and the more hype and the more bells and whistles that you see on the financial news channels and everywhere, when the janitor at your company is talking about investing in Facebook, something's wrong. So in this presentation, I want to cover some of the nasty truths behind it. And I'm going to show you guys the facts. And it's not just opinions, but these are the facts behind the IPO's release here, okay? And for some of you guys that don't know me, I'm Ty, trader coach extraordinaire. All right?
We look up humble in the dictionary and we will not see your picture.
He's not modest about that.
You know, I feel like I'm a really good trader coach. If some of you guys have talked to me and worked with me, if you have any questions, you know, I feel like I'm one of the best trader coaches out there on the market to help people. Because I've worked with so many people now that when I work with you guys, I can we get right to the point of what's causing the problem in your trading. You might not like to hear what I have to say, but I can guarantee you that that's what the cause is. So that's why I feel like I'm an awesome trader coach. All right, so can we hit the lights on that, just the front? So everybody, okay, thanks. All right, so I'm going to go over the nasty truth here about Facebook's IPO and why trading an IPO is extremely risky. In today's discussion topics, I'm going to cover why IPOs are dangerous, the nasty clues behind an IPO's debut, how to handle an IPO, why are IPOs a gamble, why IPOs should not be part of your investment portfolio, why IPOs are not good for short-term trading, and a whole lot more. And we're going to have lots of fun while we do it, right? Because you know how trading is sometimes boring and sometimes tough. So I'm going to try to make this as fun and as exciting as we can today, all right? Here's some of the things that we're not going to cover today. I'm not going to cover the exact nature or the infrastructure behind the IPO itself. In other words, the underwriting that goes behind it, how Facebook or companies take themselves public. That's not what I'm going to cover today because I believe that that's not going to help you make money. Okay, so the things I'm going to help you cover today in today's topics are things that can help you make money or prevent you from losing money. And I'm more of a tactical type of trader, so I like to get to help people just get right down to the nitty gritty. So if you guys have any questions, just stop me and holler, you know, yo or something, say something, and then stop me, okay? So here is a screenshot of Facebook's IPO on Friday. It was last Friday on the 18th. So they decided to release their IPO here, and notice how it started way up here. And it crashed down to here, bounced back up, and it came back down again, and then later on it came back up again. To the untrained eye and to the public, everybody thinks that this is a great investment. If you ask anybody, the street bums, the guys that live under the bridges here in Dallas, they'll tell you it's a great IPO, right? Everybody. How many of you guys, let's see a show of hands, how many of you guys had a friend, a relative, or a coworker suggest that you look into buying Facebook? Just raise your hands, right? Okay, interesting. How many of you guys considered in your own mind maybe looking into investing into or trading the Facebook? How many of you guys thought that it was you should just best leave it alone? Okay, all right. Now, what are some of the evidence that you guys have to leave it alone, other than the fact it's an IPO? Too much hype? Okay.
Cheating, but you tell me
Yeah.
the reason why I should do it alone is because there's no history in the past.
Okay, there's no history of supplier demand or supporter resistance. Okay, there's no history of where people buy and sell this stuff, right? I was being flooded by all my friends on Facebook. All of my friends that know that I trade called me up, emailed me, or texted me to not forget about buying Facebook when it was released. Now, these people never once contacted me, you know, when the euro dropped 100 points or the Dow dropped 100 points or nothing like that. But everybody decided to call me when Facebook came out. What they don't understand is this, okay? They don't understand the truth behind it. I took a screenshot here on my account here, and I'm going to show you some nasty, nasty truths about what happened that day when Facebook got released. Now, whether you decided to trade it or decided not to trade it that day or decided to invest in it or not invest in it, these clues here will really peel your eyes backwards and reveal the truth to you, what happened. Let's look at the first, just an overall big picture here. I got a bunch of notes on the screenshot, guys, but just bear with me here, and I'll go through it one at a time. First of all here, we're looking at Facebook here on the TradeStation platform. I don't think it's any different if you use any other direct access trading platform. You'll probably see very similar data. So any malfunctions or data issues on TradeStation, I do not believe that it's just related to TradeStation only. There was some glitches when the market opened for Facebook. So I think it's across the board and not just one particular broker. All right.
Do you think it was glitches or just?
There was just so much volume. I mean, there was over 500 million shares that were being traded that day. So, I mean, the servers can only handle so much in such a short period of time. Aside from the technical issues, that's bound to happen. So there's only so much you can blame on the broker. I mean, let's just look at the actual, the underlying of what goes on, okay? So we're looking at here the start charts on Facebook. Interesting thing is that they got two symbols, two characters instead of four like the standard NASDAQ symbols. So I don't know how they finagled that one in, but they were able to get it so it's FB for Facebook. And we're looking at a 15-minute chart here, and we're looking at the, it's kind of hard to tell from the screen here because I forgot to darken it, but you see the dotted line running down here? That represents 1 day, and here's another dotted line right there that represents another day, and then here's another dotted line right there which represents the next day, right? So here's the first day of trading, and if you look on the Friday that they opened up, the first day of their opening on the IPO, you will notice that Facebook, it shows on the charts that it went up to $45 and somewhere around there. And then it to $43, and then they said that it opened at $42, but at some point it went up to $45. And then the valuation on it was at $38 right here. So now, I just want to make it clear, guys, because I was sitting there watching it and trying to trade it at that time because I wanted to record it and show everyone the truth about trading an IPO when it first comes out. Between the opening price is around $42. Between $42 and $45, guess how many shares were traded right there? I mean, there's not much of a guess. I put it right here. The nasty clue we see here, the nasty clue number one here, guys, is that we see that less than 1,000 shares were traded between the price of $42 and $45 out of 550 million plus shares that was traded on the first day of trading. Now think about that. There was a huge $3 span. There was a $3 span between here, and only less than 1,000 shares were traded. Now, how's that possible?
So Mark Zuckerman owns the rest of these, or
No. Let's just look at. Let's not focus on who owns what. Let's just focus on how the shares were traded. Okay? Because who owns what is not going to put money in your pocket or prevent you from losing money, right? Let's focus on how it was traded, right? Between here and here, somebody out there with a malfunctioning platform or some broker out there, something happened. There was a technical issue or technical glitch or somebody playing some down and dirty trading tactics and put those, actually it was like 150 shares that was traded at $45, right? Yeah.
You don't need a glitch. I mean, if I want to buy the share for $50, I'm going to get filled at $50, right?
Yeah, but if there's nobody selling it at $50, you can't buy it. And plus, you have to buy within the national best bid and offer.
But the day of the opening, the underwriter will sell me at $50. Then if I want to buy 10 shares at $1,000, I get filled real quick.
It sounds good in theory, but when you go out there and try to buy it, if this is the current price of the stock, it's illegal for you to jump way out here and buy it way up here.
Oh, okay.
So that's illegal?
That's illegal. It's well, let's put it this way: you don't have the technology at home to do it. Okay.
So
Let's whether it's legal or illegal, you don't have the technology at home.
because
Yeah, because if the current price is right here, if the bid is here and the ask is here, right? Whatever the current bid and ask is, it's by law you have to buy within the NBBO, which is the inside price, which is the wholesale price, which is the current price.
But we know that there is technology available that can let you buy a little bit of both.
Yes, are there technology available? If the current price is right here, Is there technology available to where you can jump ahead of everybody and buy up here or sell down here? The answer is yes. The answer is yes. Do not think it. Huh?
Why would you want to?
Because I don't want to get too far off track, but I'm going to go ahead and answer that for you guys. The reason why is that why somebody, the current price is here, and somebody would want to buy like 5 or 10 cents above it, is if somebody's buying 10,000 shares or 5,000 shares, a large volume, they don't want to risk the slippage. So they would rather go ahead and pay 2 or 3 cents extra and get their entire order filled at one time. Or if you guys have a big, huge account, like hundreds of millions of dollars, you can go up there and have your orders set above it, and you can actually shake people out. And I don't want to get too far advanced into that. The reason why is because I can talk about it, but you don't have the technology or the account size at home to do it. So it's irrelevant to us individual traders at home.
So you're saying any normal
And at home
for 100 shares on that day should have just gone in at the bid.
Yeah, so what if it opens up at $42 and you're only buying or selling 100, 200, you're an individual at home trader, you're going to buy around this level right here. You're not going to have the ability or the technology or the money to jump way out here and buy it or sell it way up here. Everybody clear on that? I mean, go home and try it. It's not going to let you. You can place a limit order up there so that when price gets up there, you can buy it or sell it, but not just run out there and just buy it at the market or whatever at that current price or that limit price. They used to be able to do that. They used to, during the heydays of the 90s, you could do that, and it's called buying or selling out of the money, right, out of the current price. And there was ways to do that, but now it's really difficult. Okay, so let's get back to here. So if there's only less than 1,000 shares traded between these two price levels right here, what does that tell you? That's not real. So whenever you hear the news and somebody said that, oh, Facebook just shot up 10%, 15%, or it's up 20%, the truth is less than 1,000 shares were traded there. You could not have gotten filled on a buy or a sell order in that area. So saying that the price went up 10% or 20% or whatever is completely irrelevant to you because you would not have had the ability to do it at home. Is everybody clear on that? So now, let's take a look down here. The nasty clue number 2. Nasty clue number 2 is that over 550 million shares were traded at $38 and $38.01, which clearly shows that the underwriters were trying to prop up price and keep it at $38 to make the IPO debut look rosy and pretty. But if you know what you're looking for, let's go back to here. This is the day that the IPO happened right here. And right here, it's kind of blurry, guys, and you may not be able to see it on the slide. But this right here in the yellow is $38, and the price right above it is $38.01. And you're not going to be able to see it from there, but right here on my screen, it shows 234 million shares traded right there at $38, and 222 million shares were traded at $38.01. So the math, just a rough estimate right there, that's 456 million shares that were traded at those two price levels. Notice how at the rest of the price levels here, hardly anything was traded except the bulk of it was right there. Can you guys see that? Right? Can you guys clearly see that? So even though they said that price, the Facebook shot up all up through here and everything, the reality of it was everything was traded right there at the bottom. Right there. And because it would really hurt them, right? It would really hurt them if they let price fall below this, okay? Below that $38 price right there level, it would really hurt the underwriters and everybody. So it would benefit them to keep it at that price. And they made a ton of money by keeping it at that price. In today's, 3 days later in the newspaper, it said that Morgan Stanley, the lead underwriter for this, right? They made over $100 million that day. Now, I'm not going to go into the details about how they went about doing that by keeping price there that they made $100 million. The reason is because none of us can do it. So it's irrelevant to talk about it. Let's talk about the nasty clue number 3 here, right? Is that I tried to see what it was like to buy a very, very high demand, very popular IPO the day it opened. So I logged into my live account and I bought 10 shares right here on this red candle as it was falling. I actually bought it right somewhere right there. Because I was looking to see, hey, maybe it'll take profits and pull up. And what happens is I bought it right there at the top of that red candle, and it bled all the way down here to 38. And it bounced back up. And now keep in mind, I had a 15-cent stop loss on there when I submitted the order. And it never got filled. It never got filled, and I was down $2. Keep in mind, I put in a 15-cent stop loss, so I was willing to take a 15-cent loss on it, but the platform never filled me because there was never shares for me to get filled. And this was only 10 shares, folks. So it came all the way down to here, bounced off of 38, and then on this green candle, as the price was shooting up, the green candle represents that everybody was buying, right? So at that point, that's when I got filled for my 10 shares. And I was down like $1.50, even though I had a 15-cent stop loss on it. So it sounds really good and dandy that there was, several 100 million shares traded. The truth is, you wouldn't have gotten filled. The other truth is that on an IPO, I think that by law, you're not supposed to be able to short it within the first 30 days to give the IPO, the company, a chance to survive. So during that time, I was not shorting it. I was just trying to sell and get out of my long position, but it would not fill. So I ended up losing almost $1.50 per share. And lucky I was only doing it with 10 shares and not 100 or 1,000 shares. Or else I would have taken a nasty bleeding on that. And that's another lesson for you guys there. Anytime you want to try something new, guess what? Do it with 10 shares. Right? Because when everything goes wrong, guess what? You can still afford, you don't like to take $1.50 loss, right? But hey, at least I did it, and I can sit here and tell you guys that it was nasty. I couldn't get filled. I ended up having to call the brokers, the trade desk, and tell them to close out my position for me. I tried every which way I can think of to close out the position, and it just wouldn't close. And then when I finally called up the trade station broker, the trade desk, the agent, the customer service rep, he told me, just wait a minute. And I was like, wait for what? I mean, it's only 10 shares. There's millions of shares being traded. How come I can't get filled? He goes, well, we don't have no shares to fill it.
So there were no buyers.
Yeah, there was no people. I was trying to buy it to get out, and there was nobody selling it. So and then it finally turned green during the middle of the conversation. I was pissed off, and I was like, hey, what do you mean you can't fill 10 shares? And then he goes, hey, go ahead and try to get out now, because the candle was green, and then I hit close, and then it exited my trade for me. And then he confirmed for me that it was out. But there was a lot of people that put in buy and sell orders that day that did not get filled. And then guess what? 2 days later, they get a statement from their broker, an email statement from their broker saying that their orders got filled. And they went home thinking that, the people went home thinking that their orders never got filled. So there's a bunch of lawsuits going on about this, okay, that the brokers didn't fill people's orders. So that's another thing. I was lucky I got mine filled, even though it had a $1.50 loss. Okay, anybody have any questions about that? Obviously, there was not enough volume, okay? So now let's take a look at nasty clue number 4 here. If you bought Facebook at the open at $42 right here, look at this long red arrow right here. If you bought it at the open at $42 on the day that it was released, you lost 26% in 3 days. 26% from here, from 42 down to here. I'm not going to say anything above that because your orders would not have gotten filled up here. So I'm just going to use where your orders might have gotten filled. How many of you guys would have liked a minus 26% loss in 3 days?
Well, in 12 days like that, you're...
Yeah. Now, if you were shorting, that'd be beautiful, wouldn't it? But you couldn't short. Now, if you would have bought Facebook at valuation price, at the $38 valuation price right here, at this thick blue line right here, then you would have only lost minus 18% in 3 days. How you like that? Only if I could have shorted that day, right? But I couldn't. Now, any questions on nasty clue number 3 here, folks? No questions? It's pretty much self-explanatory, right? The charts don't lie, guys. Anybody can say whatever they want on the news, on Bloomberg, on CNBC, on the Squawk Box. The madman can rant and rave, but the charts don't lie because the charts is a footprint. They're a footprint of what was actually bought and sold. I wanted to throw in a bonus nasty clue for you guys down here in the corner right here. This is bonus material, guys. So check out the obvious amateur entry points, all right? The amateur entry points here is what I put, right? Bonus nasty clue here reveals, and this is how the trader psychology, you should look into this, guys, right? Notice how here on the matrix here, on this ladder, this price ladder here, on TradeStation they call it the matrix, but the technical term for it is a price ladder, right? Because price goes up vertically, up and down. Notice here that price was traded at $32. At the time that I took the screenshot right here, it was like the fourth trading day here for Facebook. And notice how at $32, there was 36 million shares traded, and only 45 million shares have been traded today. And out of that, 36 million occurred at $32 at that price level. What does that tell you guys? Just throw the answers out, guys. Just scream it out. A top
Amateur hour.
amateur hours. Okay. What else? Huh?
People like Facebook.
Okay. What else? This lets you know that the average person, when they're buying Facebook or any kind of stock, they don't put orders in at 32.05 or 31.97. They put it in whole, even, round numbers. So if you guys are putting your orders or your stop losses at whole, even, round numbers, then guess what? There's a high probability that you might get shaken out and then beat yourself upside the head and stomp the floor, punch the wall, beat your forehead against the sheetrock wall at your house. Hopefully it's sheetrock, it's not a brick or, and you're bleeding profusely in the forehead and you're wondering why you keep getting shaken out. Well, here's a classic example of why, guys. Look at these two arrows. And I put here in the question here, are the 2 cents breakouts really an accident? Right? Look at this. Notice how in the second day of trading, Facebook fell all the way down to a low of $32.98. 2 cents below $33. And then the next day, it gapped down some more and fell 2 cents below $31 and hit $30.98. 2 cents below the whole number. Now, do you think that that is an accident, guys? Do you think that's an accident, or do you think that's the institutions, the big boys, know that the average person, the average amateur Joe Lunch Bucket is going to buy at those whole, even, round numbers? Okay, well, since Facebook fell and I couldn't get it at 38, I think it's a great deal at $32 or $33. I'll put my buy order right there, or maybe put their stop losses right underneath it. So if we know that they do this, then, and notice, pay attention to the stock that you trade. I'm not saying that this happens with every stock or every currency or every futures contract, but pay attention to how low it pokes below, right? How low it peaks through, and make sure that you set your stop accordingly. So if you trade Facebook, 5-6 months from now, and you're trading Facebook constantly, and you notice that they always poke below 2 cents or 3 cents below the whole, even numbers, you might want to set your stop a few ticks away from that, so that you won't get shaken out. Now that's on the stop loss. What about on the profit side? On the profit side, right? Let's say that you had a plan to take profits at 31.90 or 31.95. Well, if we know that 32 is prime target for the institutions to shake people out, then we might want to get filled for a profit right there, because we'll know that there's a high probability it's going to get filled. So it works both sides. Just make sure you use it correctly. So that's my bonus nasty clue, guys. Anybody have any questions about that? About what we went over and why it's not safe to trade an IPO?
Well, when would you do this? Would you do this a year from now so that you have a whole year?
That's a good question. That's a good question. That segues us into our next slide right here. How to properly trade an IPO. And I'm going to answer that for you. First, let the dust settle. And when I say the dust settle, what does that mean? That means that let all the fanfare, let all the hype, let all the commotion, and let the janitor finish spouting investment facts about Facebook while he's cleaning the toilet at your company. Then you can start considering to trade it, right? The next thing is, don't be led to the slaughterhouse, folks. Just don't, because you will get slaughtered. I mean, I know what I'm doing, and I got hit with $1.50 loss on 10 shares. So imagine if you came in there with 1,000 or 2,000 shares and thought that this might be a good investment grade material. You're going to get a butt whipping. Trading, and just to know, just to answer you guys also, trading is about consistency. It's not about a gamble. If you come and you tell me that, hey, Ty, I've been making $100 a day every other day for the last 60 weeks, I would look at you and pat you on the back and know that you are an awesome, awesome trader. However, if you come and you tell me you made $10,000 on a trade, the first thing I'm going to ask you, okay, on what size account and how often have you done that? If that's only happened once in your lifetime, we're in trouble. Because remember, guys, trading is about consistency. When we talk about trading for a living, if you need $3,000 a month to cover your bills and your expenses so you don't have to show up for work from 9 to 5 every day, or you need to cover a $5,000 expense each month or a $10,000 expense each month, you're trading to cover that. No one has ever come to me and said, I want to trade and become a millionaire. However, when they go home and trade, the only thing they can think of is become a millionaire from their trading. And it's not that, folks. It's trading to generate that consistent income that will allow you to, gives you the option to leave your job if you want to. Some of you guys have great jobs, and you may not want to leave your job. I feel like I got a great job. I get to make money in the markets and help other people do the same thing. I mean, I was doing it for free for 2 years before I was recruited to become a trader coach. So, I mean, I like doing it. So, you know, it's not always a bad thing. Okay, so what if the IPO shoots to the moon? I get that question all the time from students, is that, what happens if it shoots to the moon, Ty? Well, great. When it does, let me know, and for less than $10, I'll jump on it. Because how much is commissions? How much are you guys paying in commissions? $5? $7? I know it's less than $10. I don't think any of you guys in here pay more than $10 for commission. So if it goes to the moon, great. Let me know, and when that happens, for less than $10, I'll jump in on the trade. You guys agree? Mm-hmm. I'm not going to stop what I'm doing and make my couple $100 every day in the markets to go over there and gamble for $1,000, $2,000. I mean, really think about this, guys. Really think about this. On your account size, some of you guys trade with a $5,000 account. Some of you guys trade with a $10,000, $30,000, $50,000, $100,000 account, right? I don't think any of you guys, I might be stereotyping, and you know, stereotyping, you know, is always fun because most of the time it's wrong, but you know, I doubt some of you guys are trading $5, $10 million accounts in here right now. So if you're trading on the small $5, $10, $20, $100,000 account, is it really worth it for you to stop what you're doing and jump over here to Facebook and try to make $1,000 or $2,000? I mean, really, how much do you really think you're going to make? I'm not. I'm going to stick with my game plan, right? And that's the next bullet point here, is stick to your trading plan. Don't be dazzled by the bells, whistles, new shiny objects, right? The chrome plating, right, on the bumpers. Don't get fascinated with that, because that doesn't pay your bills each month. Would you rather take a trade and risk? Would you guys rather learn how to make $10,000 on one trade and only do it once a year? Or would you guys rather learn how to be consistent and make that $100 a day or $200 a day so you can pay your bills each month? Raise your hand if you want the consistency, guys. Look at that. Everybody raising hands. Wait a minute. I know you didn't. I know you just didn't sit there and go, I'd rather go for the $10,000 chunk. Tell me you didn't. You just didn't hear what I said or something. You just passive? Okay, raise your hand anyway. Okay, you see that, guys? Everybody in the room just raised their hands and said that they would prefer consistency over a huge gamble. Thanks for your cooperation there. She's like, oh man, I want that $10,000. I can use that new Coach purse, right? A Coach bag or whatever.
You'd be better off invested in Coach.
Yeah.
I wish I still own the ones I bought at $32 a share.
Yeah.
It's double.
Okay, folks. Any final questions on the IPO? Any final questions? Yes. When can you short it? After 30 days? What I would do here, folks, is this. I would wait until there was a steady, supply and demand level. And folks, this is a $40 stock, guys. Do you think that this is the only $40 stock out there that you can trade? I mean, there's a bunch more out here. Look at this. There's a bunch more right here. Why would you go and trade the most dangerous stock and have no clue of where it's going or what's happening with it? There's no historical evidence. There's no footprint of where price is going to turn. Yeah, exactly.
He's fresh and shiny. And
yeah, this is the
young.
popular kid in high school, and everybody wants to be his friend. Who cares? That's not going to pay your bills. If you're lucky, you might make some money, but if you're unlucky like me and you took a $1.50 hit on it, that can be a disaster for your account. Lucky, that 10 share trade wasn't a huge hit to my account, but some of you guys, if you lay everything on the line, that could be your whole savings right there. You guys have any other questions, guys? Any other questions? Any final questions? Comments?
I'm still surprised to see the power of pumping out a lot of hype there, and so many people got hurt, right?
Yeah, and you're surprised that it happens over and over, right? Okay, when I was working downtown at the clubs, when I was day trading in 2008, I would work at the clubs as a promoter and bouncer at night, right? In downtown Austin, in the club district, and it's packed. It's packed like sardines. Thursdays, Fridays, and Thursdays, Fridays, and Saturdays. If you're a single individual, Austin has got to be the best place for single people. And they've been voted for best place for single people many years in a row. And they would literally have busloads. I'm talking about busloads of people that they go to University of Texas, UT, Longhorns guys, and they would ferry the students from their college dorm, and they would drive them down to the downtown club district and just release it. They would open the floodgates, and they were just kids, fraternities, sororities, kids, colleges just flooding the streets, right? And it was like shoulder to shoulder there every weekend. So if you're single and you're listening to this, just go there, and if you're single and you want to meet other singles, that's one of the best places to meet. I know this is about trading, you guys are laughing, but I brought this up because there would always be some douchebag down there, right? Literally, that would fire off a gun. And guess what happens when they fire off a gun in the middle of thousands of people? Guess what the first thing that everybody does is? They run, duck, and dodge, and they trample whoever's in front of them. Now think about this, guys. We're civilized beings, and the majority of these kids go to a prestigious university, University of Texas, Longhorns, at Austin, one of the most prestigious universities in the country. These guys are smart. They're not dummies, or else they wouldn't be in the school, right? But guess what happens every time when somebody fires off a gun down there? They scatter, they trample, and they just run over each other. And there's always somebody that's hurt. That's why they have 2 police stations down there. Did you guys know that? They set up 2 police stations 2 blocks apart. Literally. They'll park like 6 police cars. They got the bus there to round people up when it's necessary. And what is it called? Something wagon?
Paddy wagon.
Yeah, the paddy wagon. I was thinking of chuck wagon. I was thinking of chuck wagon. It's the paddy wagon, right? So they would literally just round people up whenever something like this happens. The reason why I brought this story about why people get trampled over and run over is it back to what you said. It's amazing how every time the media spits all this nonsense in the media, everybody runs out there and buys it. Because it's human nature, guys. It's human nature. If I throw my hand in your face and flick my fingers in your face, you will flinch. And they know that. They know that the institutions, the big boys know that if they make a move, the public will flinch and move in a certain direction. And that's how it works, folks.